I would say her job is even not easy. None of us knows exactly what the American politics will do next. And without really knowing about tax reforms, about other things in the United States, about all that things could be happening the next time, I would say it's not very nice to have her job, and especially not having her crystal ball in front of them, because in the end she has to look forward, but has no real data she could trust in. So I could understand that she likes to be more cautious at the moment.
What do you think about her influence, though, on European markets? I mean, obviously, the Fed and U.S. markets influence global markets, but it's interesting, the situation right now, because Europe and the U.S. have kind of a similar growth rate, but interest rates are so far apart because the central banks are going in opposite directions.
I would say in the end it's the dollar that counts most, and I would say at the moment euro is very weak against dollar. That's very positive for Europe, very not really negative for the United States, but that is the game at the moment. I would say that is, for her, maybe in the end, the driving factor. She has to think about that. Normally, both very independent central banks, no question about that. But if you see the currency between, and you see that the interest rates are in the end really the things how you could steer the currency rate, then there is the point at the moment there she has to be cautious. And there, not only she, even the ECB has to be very cautious, because every play on interest rates will directly influence the dollar, and that could be negative or even positive.
I'm glad you said steer instead of manipulate.
Yeah.
Right now we try and avoid that term. What do you think about the European economy now? We're seeing the growth rate stabilize. We're seeing inflation start to climb. From the companies that you invest in, from the executives that you talk to, what's the temperature of the European economy seem like to you?
It's a little bit like today here in Berlin. If you look at the weather, it's the first time the feeling of spring. And I would say that's the same thing for the economy. We see better number in some of the things, really much better numbers in that thing. Even countries like France, like Spain, looks very good. We see lower unemployment rates. We see inflation is coming in, and this time the people not talk negative about inflation. This time the people talk more friendly about inflation. That's very helpful. With these, I would say, with the better numbers, with the lower unemployment numbers, consumption is coming back. That's all good for the European economy, and that exactly is what the companies tell us. The fundamentals look much better as before. The feeling is much better, so the people are much more friendlier to talk about that things. And at the moment, the only disturbing thing is politics.
Is that, well, I want to get to politics in a second, but does that underlying positive economy play through to earnings season? Because I notice right now the Stock 600, for example, is priced pretty cheap to forward earnings.
At the moment, you could really see that that is coming through. You see the banks looks better. You see the cyclical sectors are coming better. You see mining is coming better. You see the stables are stable, what the names say. The dividend stocks running, the results are good. The cash flows are coming through. All that things works at the moment really on the fundamental side. So if we look only for fundamentals, there's more as one good reason to be in Europe.
Do the banks continue to have earnings looking better, even if Mario Draghi continues with his kind of scorched earth policy, this negative interest rate policy, without any concern or care for German inflation?
I would say he cares about all of those things, but I would say it's for him really, there's Germany and other countries, and the other countries are very, very important. And he gives the other countries really the time to repair the economics there, and that works very well. I would say his politics works, even if a lot of people make a big question mark behind that. But now you really see the positive results out of that things. So, and even if I have a German passport, I'm a European, and as a European, I have to look for 28 different economics at the moment. And for the most of these economies, is what Draghi doing extremely important, extremely good. So yes, I'm with them. Yes, banks will, even with these politics, not do bad. They will do better, because if you see forward looking, then the negative interest rates will be history. from next year on, I'm absolutely sure that Draghi has to do something on the interest side.
All right, so with that said, and you like European equities, the price-earnings ratio is relatively low, definitely relative to U.S. stocks. Is that because of the political situation? Is that the big scary thing that keeps you up at night as the chief investment officer for European equities?
I would say it scares me, no question about that. Keeps me night awake, and I don't believe so. I would say for Europe, it's absolutely normal. There are 28 different countries. So we have in 28 different countries every 4 years election. So to have 4 or 5 elections a year is nothing new. Maybe we make too much out of the situation at the moment. And due to the situation that maybe some of the elections went into the wrong direction, we make even more out of that things. But for me as an investor, as an equity investor, as someone who's looking for dividend, are the fundamentals the only thing that counts. And politics will disturb me sometimes, but if the fundamentals are bad, then I have sleepless nights.
But are you not worried about, you know, the redenomination risk, that trendy phrase, if Le Pen somehow gets into office in France or even Greece, you know, dropping out of the Eurozone and breaking things up?
I would say, first of all, I don't hope that will happen, but after Brexit, I've learned a lot of things could happen. That is the first thing. The other thing is nothing in the end will be happened if it seems in the first moment. Le Pen, even if she's coming in duty, she has to do the things forward, that has to work, that has to make done. Brexit has to show us how that all will work. And I would say we have done time to handle that well. At the moment, it's really so. Fundamentals looking good, companies are looking good, unemployment rates are going down, consumption is coming through, earnings going up. That's positive for equity market, and that counts at the moment.
Let me just finally ask you about U.S. equities. I know you're focused on Europe, but in the sense that all the flows seem to be going there. I mean, the bull market seems almost unstoppable no matter what Donald Trump does, or maybe because of what he's doing. At what point do European equities come into favor the way U.S. equities, or what do we need to see to turn that around as a catalyst?
Very good question. No question about that things. I would say, first of all, the Americans looking for their own market. They see what Trump could do for the economy, especially with the tax reform. That is normally very positive, especially for companies with high tax rates in the United States. For the bigger companies, we will see what that means. But Europe is at the moment so incredibly cheap that we maybe need at the moment a little bit more the reflection what Europe really means. And maybe after the elections in the Netherlands and France, if the things will go this time into a different direction as the Brexit, that could be the trigger point that the people coming back and see how cheap Europe is. But it's for sure, if I'm on the other side of the Atlantic and I look to Europe and I see the political things here, why I should invest into that things, even if it's cheap. And you are here in Europe. You see that maybe the most of the things that people believe that Europe will break and Europe is not something that is worth to fight for. That's wrong. Europe is the best. The EU is the best it could happen in the last 50 years. It is worth to fight for that things. And that will be, I would say, the people will learn that, they will do that, and then I'm absolutely sure investors will come back into this market.